What up, Hyperchange? Welcome to another episode. This is going to be an epic one. Wanted to make a video debunking the best Tesla short thesis I could find. For those who don't know, Tesla is one of the most shorted companies on the NASDAQ with over $10 billion of capital betting on the company to fail. So the short seller I decided to pick here is a guy by the name of Jim Chanos. Now, the reason why I decided to pick Jim Chanos to, analyze his short position is because he is an amazing short seller. He was the one who called Enron, made a bunch of money on betting on the fraud there. He has a reputation of being one of the Wall Street's best and sharpest short sellers, and for good reason. His hedge fund, Kinnikos and Associates, has a track record that has crushed the market over his career. And additionally, he has been very vocal and public and transparent about his short of Tesla for years. He's done a ton of interviews on CNBC and Bloomberg explaining his short rationale. So this gives me a ton of material to really understand what his thinking is behind shorting Tesla. So huge shout out to Jim Chanos. I have a ton of respect for him, but I just think he is wrong on this trade. So now let's see why.
So one of the things that's just sort of stunning, and I think there was a piece of news overnight, the head of Autopilot left, is the accelerating rate of executive departures. And one of the things that I've learned in my zillion years of selling short is that probably the number one sign of impending problems is mass executive departures. I don't mean one or two people. I mean 30 or 40.
You're talking about rats leaving a sinking ship.
Well, I'll let you say that, not me, but yes. I mean, this is becoming a torrent at Tesla. And we keep this sort of list that is somewhat well known, the Tesla executive departure list. And it's now 2 pages, single space for the last 18 months.
So first of all, this executive departure list is actually publicly available. I found it. I'm going to put a link to the description. Yes, he has cherry picked the name of 39 executives who have left Tesla over the past 2 years. Now, keep in mind, Tesla has 37,000 employees, so 39 of them leaving over 2 years is actually, just cherry picking names out of the hat. And additionally, you might be saying, well, these are high up executives. This really matters. Okay, well, Jim Chanos's spreadsheet, list where he keeps track of this also has the tenure of each one of those executives who have left the company. So I decided to compile all of this information in a spreadsheet and see what the data spit out. Here's what I got. Out of the 39 executive departures, the average tenure was about 4.6 years. So I did some Googling, and according to this study, the average tenure of a C-suite executive at the largest 1,000 US companies by revenue was 5.1 years. So even cherry picking the Tesla executives that have left are almost exactly in line with the industry average of what executive turnovers are. So really, his data here, when you actually look at it in the grand scheme of things, comparing to other companies, actually just proves that Tesla's executive turnover is almost exactly in line with the industry average. So I've been following Tesla for 10 years, and in my opinion, they have one of the strongest executive teams in the entire world, and that executive team has been with the company cohesively for almost a decade. Let's go through that. Their CEO, who's been with the company for 15 years, a guy you may have heard of by the name of Elon Musk, sold his first software company Zip2 for $300 million, sold PayPal for a couple billion, now is running SpaceX and Tesla. I mean, I cannot think of another CEO I would want running a company that I'm invested in. I think he has a phenomenal track record. He has displayed tremendous commitment towards Tesla, has a massive amount of his net worth invested along with the company. You couldn't say that for almost any other automaker CEO. The CTO, who I think is a foundational pillar of many of Tesla's technology and battery breakthroughs, JB Straubel, joined the company as one of the first employees in 2004, has been the CTO ever since, sporting a 14-year tenure at the company. Additionally, you have Deepak Ahuja, the CFO, who has navigated Tesla, through the financial crisis, through all of these crazy times. He did take a year and a half off, but other than that, he is back and bigger than ever and has been with the company over a 10-year span. Now, the fourth executive that I think is tremendously important is Frans van Holzhausen, or I hope I'm saying that right. He is the designer who has designed many of Tesla's award-winning, futuristic, beautiful-looking cars, and he has been with the company for 8 years now and continues to be more committed than ever. So when I take a step back and look at Tesla's executive team, I actually think they're A-plus rock stars who have been with the company for almost a decade. But of course, if you cherry pick the data of who is leaving, you can get a list 2 pages long of executives that have left over the past 2 years. That's a non-factor. Anyway, the next point.
You had said in June that you would give up the short once Tesla begins making money, and the predictions on that aren't until what? later this year at the earliest, but analysts probably thinking second half of 2019.
Not even later this decade.
Okay. So you don't see a turnaround in the works here?
Well, 3 years ago, Scarlett, this company was supposed to be making money now. And now it's supposed to be making money by 2020. And I'm guessing, by 2019, we'll hear about 2025. This company is structurally unprofitable.
When we started shorting Tesla, the 2020 earnings estimate was $20 a share. It's now down to about $4 or $5 a share. So the problem is that this has been pushed out and pushed out and pushed out.
So here Jim Chanos says that, Tesla's earnings estimates have been pushed out. All these promises of profitability have been pushed out. Yes, he does have a certain point there here, but the other bigger thing going on here is that analysts are always projecting massive profits 2 years out in their spreadsheet models. And that is why as we get closer to those estimates, they always have to bring them down. And that is the trend he is referring to here. Another company that this has happened to for the past decade that I've been watching is a little one called Amazon. So this isn't actually a sign of a bad company. This is just a sign that analysts don't know how to model, these new era tech companies that are putting growth ahead of profitability. And that is just a new paradigm that makes these analyst estimates look way off. And of course, if he's cherry picking that data, he can spin it to make it look like Tesla's been underperforming when that's just not the reality at all. The reality is the analyst models are just wildly inaccurate. The second point he makes of structural profitability here has a little more meat to it.
There are some problems. For example, the way they report gross margins. They report gross margins in a way that no other auto OEM does. Every other auto manufacturer includes R&D expense and certain other things like service costs and warranty costs in their gross margin. Tesla does not. So it inflates Tesla's gross margins by as much as 10 full points. So when Tesla says our target gross margin is 25%, it's really on an apples to apples with every other auto OEM.
They don't have the traditional dealer or service network, though.
Right.
Right.
Which is a problem.
So you can't make the apples to apples comparison with other cars.
Of course you can. R&D is still the same at R&D.
So I love this point because it's super easy to debunk. Jim Chanos' entire thesis about R&D is that traditional, mature auto companies are spending R&D to upkeep their current vehicle lineups, and that's why that upkeep should be included in the gross margin because it's just used to upkeep the current sales or the current product lineup. Tesla's in a fundamentally different position because they are not a mature company. They only really have the Model S and the X on the road right now. In the future, they're going to have the 3, the Y, the Semi, the Pickup, the Roadster, not to mention all that they're doing in energy too. So in my opinion, the bulk of their R&D expense, most likely 75% of it, if not higher, is actually going towards future vehicles or future technologies that haven't even been developed yet and aren't being sold, and therefore they shouldn't be included in the gross margin. Additionally, Tesla does its accounting very much like a tech product company, sort of like Apple, where they're putting their R&D for future products, as well as the SG&A to run their retail stores in the OPEX line. And sure, you may say they're trying to finagle the gross margins here. I just don't think so. I just think they're reporting it differently because they're just a different company than a traditional automaker and they're structured more like a tech company. The other point that Jim Chanos makes here is that the service revenue isn't included in gross margin. In their gross margin line, if you look at Tesla, they do include service revenue as a line item, and the costs for that line item are all before the gross profit line. I think the point he's making is that they're taking out that service revenue and cost from the auto line cost, and therefore you're not including it, and they're trying to juice that one gross margin. Sorry, BS. The bottom line is the service costs are above the gross profit line. When I calculate it as a Tesla bull, I'm actually including their service costs in their gross margin and just lumping that in with the automotive business. So I just think these are non-factors.
But the bigger problem is that Porsche's coming.
Let's say that again. You think
Porsche's coming?
With their own car.
Porsche's coming with the Mission E, and
so is Jaguar with the I-Pace.
And so is Audi with the e-tron, and these are amazing looking cars. And what Tesla did was made EVs sexy. Mm-hmm. And I've always said that. Elon got the Model S out.
Electric vehicles.
Right, electric vehicles. But the Model S is 7 years old, and now the big boys are coming, and they're coming with sexy looking cars at the same price point with better features, faster cars, great styling. And so what was unique for Tesla is no longer unique.
I love this. Jim Chanos is all about Porsche. The Mission E, this fancy Tesla killer, is going to come out and crush Tesla. I just think that is BS for so many different reasons. The biggest reason being that Tesla has the unique retail store model to educate consumers about electric vehicles that is actually incentivized to sell cars, unlike the traditional dealer and franchise model, which hates selling electric cars because there's no maintenance revenue. So I don't know how Porsche is going to get around that to sell the Mission E. Second of all, Tesla has this massive supercharger network, so you can plug in your car and go anywhere in the world. They spent hundreds of millions of dollars, built that out over 6 years. No other automaker has that. So those are two massive advantages of why I don't think, the Tesla killer, especially Porsche, is going to be successful. And this is actually something that Jim Chanos has been preaching forever. There's always going to be a Tesla killer. Listen to what he said in 2015 about BMW.
In September, we think that BMW, which is a little company in Germany, sold just about as many electric cars in the US as Tesla did, about 2,000.
Okay, so let's look at those September 2015 BMW versus Tesla sales in the US that you claim BMW was outdoing Tesla. According to Inside EVs, Tesla sold 2,500 units in September 2015 versus just about 1,900 for BMW. So I don't know where he's getting this data, but that was just a flat out lie pretty much. But hey, let's not cherry pick. Let's see what the data is on a holistic level about BMW and Tesla in the US. And keep in mind here, I'm actually including all of BMW's plug-in hybrids as well, not just pure battery electric vehicles in these numbers. And as you can see, from 2014 to 2017, Tesla has absolutely trounced BMW in electric vehicle sales every single year. And if you look at what's happening in 2018 with the Model 3, Tesla is now outselling BMW by more than 3-1. The gap is widening. So, I always hear these Tesla shorts cry, Tesla killer, they're gonna come and everyone's gonna get screwed. I just don't see that happening at all. Look at the Chevy Bolt, the only Tesla killer that's actually on the market. Its sales have absolutely cratered now that the Model 3 is out. In May 2018, the Model 3 was outselling the Chevy Bolt more than 5-1. So talk is cheap. I'll believe it when I see the sales numbers that are backing up that these are Tesla killers. Beyond that, there was a survey put out that about 20% of Americans are interested in buying an electric vehicle as their next car. I think the real trend here is that there's actually not enough electric vehicles to go around that consumers want. That's why there's such a massive waiting line for the Model 3. So even if Porsche is really successful with the Mission E, I don't think it's going to kill Tesla. I think we need to be selling millions and millions of electric cars, and there's enough for 2 or 3 winners. That's why this entire narrative of the Tesla killer is just so wrong to me. Anyway, let's go to the next point.
They talked about being a leader in autopilot. They're now a laggard in autopilot. Their technology is behind everybody else's.
And one more point. Tesla's now behind in autonomous driving. And that's what a lot of people, again, put these sort of stories like autonomy and mobility onto the stock. They're level 2, same as GM. And GM, many observers believe GM's Cadillac autonomous features are better than Tesla's. Audi's now at 3.
So Jim Chanos loves to point out how Tesla is absolutely getting hammered. They're in last place in the self-driving race, and he always points out how Audi is at level 3, but Tesla's at level 2. Well, I was actually at the Tesla shareholder meeting, talked to someone who used to have an Audi A3, now has a Model 3, and I'll just let them explain why they like Tesla's self-driving system so much better.
So when people say Tesla's autopilot is only in level 2, Audi's in level 3, I just feel like that's so theoretical.
So the Audi, and actually my wife's car also has the same features of lane keep and also adaptive cruise control. Okay. Theirs are an half-ass version. So this stays in the lane really well, really well. Okay. And my Audi before, it didn't really stay in the lane. It would just ping pong left and right, and it would lose the lines all the time. This will see the lines at a stop and keep going. And it doesn't lose the lines at all. Whereas my Audi, after slowing down after 10 miles per hour, it's I don't know where the lines are. I'm gonna just not work. And they don't tell you when it's not working, so it's useless.
Wow.
I would never turn on the lane assist on my Audi. This I use it everywhere.
And this is why I think Jim Chanos' short thesis is so off. Sure, on paper, Audi's level 3 system is better than Tesla's level 2, but in reality, when you talk to consumers, Tesla's product is vastly superior. They have vastly more trust in what Tesla's doing. In my opinion, this shows that Tesla is vastly leading Audi in reality. The second point I'd like to make here is that nobody has level 5 self-driving autonomy. This is not a material part of the transport ecosystem. It's going to be 5 years before anyone, even like Waymo, has a big enough service that's publicly available to make a dent in in overall car sales. The second point is it's all about data. Data is the new oil. Tesla is collecting billions of miles driven because it has a fleet of hundreds of thousands of cars equipped with massive cameras and sensors, training its neural network to improve its self-driving capabilities. No other automaker has that. I believe data is going to be the moat that proves Tesla is the leader in self-driving.
For example, he made a rollout last year of the Semi and the Roadster. He said the Roadster would be available in 2020 and the Semi will be entering production next year. I don't think either of those are going to happen.
You know, there have been all kinds of announcements that this company has made, just in flippant comments that are public statements that turned out not to be true. For example, most recently, he unveiled the Semi, the Tesla Semi, and the Roadster. And he said the Semi will be available in 2019, the Roadster in 2020. Where is he producing those? Those production lines have to be up and approved now.
This is one that I really love. Okay, Tesla's always late. They can't keep their promises. Let me give you an example. The Tesla Semi and the Tesla Roadster. They haven't been late on those. FYI, Jim Chanos, those are supposed to come out in 2019 and 2020. We're not in either of those 2 years, so Tesla hasn't actually messed up yet. And once again, I think this is just Jim Chanos trying to cherry pick the facts to spin this bearish narrative. You know, he's going to say, oh, Tesla only delivered 200 semi-trucks in 2019. They said they were going to start deliveries. They barely delivered any just to make it look like they did. You know, they missed their target. That's what he's going to be saying in a year, when the reality is the semi-truck is incredibly disruptive. You know, it is changing the industry. Even if it's a year late, it's still going to add billions of dollars of potential to Tesla. You know, you nitpicking on these deadlines is just totally missing the bigger picture.
You know, Mercedes-Benz has electric semis on the roads right now testing. You don't hear them crowing about this every day. You don't see the CEO, you know, coming out. They're on the roads testing. And so it's not as if electric semi-cabs are new. They've been out. And so it's remarkable that this company keeps hyping things that are all the way out.
And what he says about, you know, Mercedes already has an electric truck on the roads. There already is an electric truck out there. The specs for Mercedes electric truck are garbage. That's why no one's buying it. That's why it hasn't inflected the industry. The big deal here is that Tesla can do a truck with 500 miles of range that can recharge in 30 minutes. You know, Mercedes isn't even close to that. And the fact that Tesla is going to do that is going to mean they're going to take absurd amount of market share in the trucking and freight market. And so, you know, like every single one of Jim Chanos's points of like, oh, the Semi and the Roadster are coming late, it's whoops. I'm like, okay, even if the Semi and Roadster come 2 years late, there's still going to be multi-billion-dollar revenue stream for Tesla that is going to justify a valuation a lot higher than where we are today. So he's just constantly missing the bigger picture.
Which is, the theory is you think that Elon Musk is going to leave the company?
I do. I think he's going to actually leave as CEO. I think he's going to move over to SpaceX. And I think that if you read his compensation package that was approved by the shareholders, it specifically said he keeps the compensation package if he remains as non-executive chairman and someone else becomes CEO.
He has to be, though, I believe, the chief product officer, so it'd be very hard to...
Well, he better be, because everybody else is leaving, Andrew.
No, but don't you think it would be very hard for him to leave the company?
I think that it'll be very easy for him to stay non-executive chairman and chief product officer. But I think his desire is really to go over to SpaceX from everything I've seen. You saw the Rolling Stone interview with him in November. All the glossy pictures were at SpaceX, not Tesla. And besides, Mars doesn't have an extradition treaty with the U.S.
This one cracks me up. Musk is going to leave as CEO. Uh-oh, he's going to go to SpaceX. Well, okay. First of all, he's just totally nitpicking, you know, formalities here once again. Yes, in Elon Musk's compensation package, there is a clause that says he could go to be executive chairman of Tesla and move into chief product officer role as well and let somebody else come in as CEO. And Jim Chanos is saying that's a bad thing. I don't think that's a bad thing at all. I think Tesla could really use a strong CEO with a really good operational background. Letting Elon Musk focus on the product, I think would be a really good thing for Tesla. And if you actually read that compensation package, Jim Chanos, it says that Tesla has to get to a $650 billion market cap, up more than 10x from where it is today, for Elon Musk to reap the full rewards from his package. So if anything, Elon Musk, who takes $0 in salary, is literally incentivized to 10x the market cap of this company. That is the same pay package you're referencing here, which you view as a bearish thing. So like literally every single thing that he views as a negative, I actually think is a positive. This point is just kind of funny, but I want to throw it in there anyway.
By the way, the
What do they
shares
see?
are up 50, probably still something like 50% this year. How long can you afford to keep staying short for the company?
Well, the stock has underperformed the market for the last 3 years, Kelly. The stock was at 280 in 2014. The market's up about 40, 50% since then. So it depends on where you want to start your analysis.
Yes, it does depend on where you want to start your analysis, Jim Chanos. I know you're smarter than this. If you take a look at the all-time chart of Tesla, he's saying that if you take this very high peak the stock did in 2014 after it had quintupled in a year, then you can see that since then, Tesla stock hasn't actually performed that well. Yes, that is very right, but just like you said, Chanos, if you're cherry picking when you start that data, of course you can spin it any way you want. If you look at Tesla since its IPO, it has gone up over 1,800% when the market has gone up just 150%. Tesla has absolutely trounced the market and most likely trounced the returns of your investment fund, Jim Chanos, since it went public. So this is just a cheap shot, low blow. I know you can do better than this, Jim. Anyway, next point.
But then the question is, when does the market decide they're no longer going to provide capital under this business model, which is we provide you capital for this long-term thing that we think is going to happen? When does that? What's the tipping point?
I have no idea. It should. At some point, investors are going to see the capital as being incinerated, right? I mean, they're just providing capital, and he has to come back to market and providing capital, and it's gone. At some point,
and you don't think there's any point where you look and is there anything encouraging where you've said, you know what, maybe they're getting finally closer to a turning point here?
I think actually it's getting worse.
Do you have a price target in mind?
Well, we think the equity's worthless. So how's zero?
Zero. That's a pretty aggressive one.
No, we think the equity's not worth anything.
But aren't they like shale, where they can keep going as long as people give them capital, including deposits for future vehicles?
Right. That's going to be the problem, I think. That in fact, a company that wholly dependent on the capital markets has to assume that the capital markets will always stay open to them. And that's a very dicey proposition in my lifetime. The capital markets close from time to time.
This is actually the strongest building block of the bearish thesis, which is that Tesla consistently needs to raise capital. Their business model is reliant on the capital markets. And as Jim Chanos said, sometimes the capital markets freeze up. If there's an 08 scenario and you can't raise money, but you need $1 billion to stay afloat, you're going to get screwed. And he's saying that could kill Tesla. I think that's incredibly valid concern. And, I made videos on this. Tesla is in startup mode. They're building massive factories. This is not a cheap business. But the caveat here is that Tesla with the Model 3 has said they are about to go profitable. If they can indeed do this and start making positive cash flow from operations and not need to go to the market, this will debunk the last and the strongest pillar of the short thesis. So while I do give Jim Chanos cred that yes, Tesla is in a rocky position now, and if a recession hits tomorrow, they could be totally screwed, that is about to change. And in the next 12 months, as they get Model 3 fully ramped, if they can really be cash flow positive, and this is why it's such a big deal, this entire narrative of they constantly need to raise capital, they're constantly incinerating capital, goes away. And I'd like to point out that I don't think Tesla's been incinerating capital at all. I think they've been done a tremendous job spending the billions that they've raised. This is a company that was doing $100 million when it IPO'd, is compounding at a 90% plus CAGR. The growth here has been absurd. They've inflected the entire industry towards electric vehicles. So I don't think they're incinerating capital at all. I think they're spending it to build up long-term moats and to set themselves up to have tremendous tens of billions of dollars worth of earnings power in the long term. And we're about to go through this inflection point where Tesla grows up and they don't need to get capital from the markets as much anymore, and they can start to fund things on their own. And at that moment, the entire short thesis will crumble. So, this is what it is. That wraps up my debunking of Jim Chanos' short thesis. On a very high level, what I think Jim Chanos is getting wrong, and what I think every short seller is actually getting wrong here, is they're cherry picking facts to fit their bearish narrative that don't actually matter to the bigger picture. The executive turnover. Okay, you got a list that's 2 pages long. And, okay, Audi is L3 on paper, Tesla's L2 on paper. And the Tesla semi-truck isn't going to come till, 2020 instead of 2019. And, none of these are actually, really convincing me that Tesla is a short or that Tesla's screwed. They're missing the bigger picture, and that's why they're going to miss one of the greatest stories in American capitalism. I believe Tesla is going to be a multi-$100 billion company on its way to $1 trillion market cap, entirely disrupting and transforming morning are transport and energy systems to sustainability, which I think is incredibly good for the world. They're led by Elon Musk, the founder who's coding robots at the factory at 3 a.m. in the morning. I don't know how you could possibly sleep at night shorting a stock where the CEO doesn't sleep at night. That makes no sense to me. The point of this episode is, Jim Chanos, if you're watching, I would love to debate you. I've already talked to Cheddar, sort of gotten a go-ahead that they will host a debate live from the stock exchange. I don't know. I would just have a blast. You know, you can expose the naive millennial YouTuber in his apartment who doesn't really understand the bull thesis. Why not? Anyway, I would love to know what you guys think in the comments below. Do you agree with me? You know, do you think Chanos makes any valid points? Also, if you like Hyperchange, definitely check out our Patreon page. Consider supporting there. We have an awesome weekly newsletter. Anyway, I'll see you guys next time. Have an awesome weekend. Peace.